Morning, guys. It's the 12th of February. We're Signal Centre Talking Ball. I'm Joe Neighbour, joined by Ian Coleman and Steve O'Hare. Good morning, guys, and happy Friday.
Indeed,
Yes,
a happy
lovely.
Friday.
Lovely.
Blow you
very
both a
nice.
kiss for Valentine's weekend.
Oh, yes. I haven't got time for that, E. I've got plenty lined up for the weekend, so I won't be able to take your kiss as well.
Oh, right.
I'll be watching,
Actually, I will take it. If it's from Tracy, I'll take it.
Tash doesn't know that we'll be watching Arsenal on Sunday afternoon.
Oh,
which,
you
will be
romantic bastard.
Nice and romantic.
Yes.
Yeah. Well, it's, we wear red, don't we? So for roses.
Yeah.
And
You feel a bit redder afterwards as well.
yeah, probably. Shouting at the TV. What you got planned this weekend, guys? Anything? Obviously, we can't go out, but
I'm going out clubbing.
Oh yeah.
Yeah. Just clubbing people who are walking about spreading the virus.
Couple of raves.
Lovely.
Down the local boozer.
Uh,
Have a lock
Is there that
in.
sort of thing going on, do you think? Do you think there's a lot of people just...
No, I don't think so. I think there probably was to start with, but I don't think now.
No. We're nearly there, I think, guys. It won't be long.
It's too cold to walk home, isn't it, afterwards?
Exactly.
Yeah.
Got to grind through a half term next week with the kids, which should be fun, trying to keep them occupied and sane for a week. Stop them killing each other.
You need a bit more snow, mate.
Yeah, no, that can do one as well. Had enough of that.
Joe's so pissed off because of the snow.
Joe's got an angry head on this week.
I've got an injury, so I can't run. I think that's what the problem is.
Oh, okay.
Anyway, Year of the Ox has begun. I was born in the Year of the Ox as well, I think. So coming back around.
Was that sort of like 1995 or something?
85. 85. So despite all the coronavirus fueled drama, the Euro Stoxx 600 equities closed less than 1% down over that year, which is pretty crazy, really. And the frenzy in US trading equities is showing no signs of stopping, set to surpass levels seen during the worst of the pandemic in March. Oil continues to grind higher, 8 days of consecutive gains, its longest winning streak in 2 years.
No, it broke it yesterday.
Oh, did it?
Yeah, that was the daddy. It broke its longest run in 2 years. So it was 8 days, got broken.
We'll come on to some charts on that shortly then, no doubt. Bit of Brexit news back in the press, which is exactly what we all need at the moment. So locked in a standoff over how to implement the Brexit trade deal. There was a rare face-to-face meeting between Cabinet Officer Michael Gove and European Commission Vice President Mario Sefcovic in London.
That'll do.
Yeah. I could have gone very wrong. No resolution on any key disagreements there. So looks like that's going to come back in the news. Mario Draghi looks like he's going to unify Italian politics. He has had the backing of the Five Star Movement, which typically is an anti-establishment group. So it looks like they might be sorting themselves out over there. Anything else you guys have seen in the news before we move on to some charts?
No, mate, that's about it, really.
No.
But the UK data this morning, that was pretty rough, wasn't it?
I'm not sure, didn't see it.
9.9% slump in the UK economy. I don't know if that was better or worse than what was expected.
There's a lot of green on the board, though.
Maybe they were better than expected then.
Trade balance was worse. Industrial production was better than expected. Manufacturing was a bit shit. Blah, blah, blah.
I suppose that's actual against the consensus, is it? Is that why it goes green?
So that's consensus there. This is the deviation. This is the actual.
Yeah.
So GDP was better than expected. I mean, this is shocking, isn't it? Obviously, minus 8.1 was expected, so it's only come out slightly better than expected from a shit figure to a slightly better than shit. Yeah. But the GDP here, gross domestic product quarter on quarter, that's stepped up a bit.
That's 0.5% better.
Supposedly, that's the one that everybody looks at.
Yeah.
They're giving up looking at year on year.
So it's all a bit of a mixed bag, really. I think sterling was on its way lower yesterday anyway, so I think it's maybe just a little bit of follow through. But
had a decent run of late, hasn't it? But looking a bit mixed really across the board. I think a stronger dollar this morning seems to be dragging cable lower, but don't wish to steal your thunder on the charts here, and you can run us through that now. Which of you two wants to go first today? We're looking at equities and metals or FX?
I'm easy. Whatever. I can go into indices.
Go on then.
As we were talking about, we've seen a little bit of a turn in the markets over the last few days. On the European side of things, the US continues to push higher. The real formation we're looking at, potential formation, is a potential reverse head and shoulders. It's playing out quite nicely at the moment, but still has a lot of work to do before we can actually call this. We need a break of the neckline, which is around about just above 6,300. We're trading at 6,500. So it's still a couple hundred points to the downside, which is more than a couple of days' work. So won't really see that today. Potentially just sort of like negative sentiment following through, maybe close a little bit lower on the well, from a weekly perspective, we're sort of just showing a little bit of a retest of that 61.8 and then a rejection of it. So potentially looking for a small sell-off in the FTSE today. DAX, let's go back to the daily chart. Again, we've highlighted this potential double top. Again, long way to go before we can get excited about it, but definitely signs of topping formation. Evening doji star here, followed by a couple of negative days. So European and UK side of things a little bit negative. This is the CAC. Again, we're in these ending wedge formations, which are potentially negative. So Dow Jones, a little bit of a rounding top here, a couple of hanging man candles. This is what they look like. As you can see, it's where it opens higher, spikes up, goes down, tests the lows, and then rallies back to close to where it opened in the higher part of the candle, and that's a negative candle. Although that's green, this one is exactly the same sort of formation. So that's the same sort of a day trade that happened the previous day, and then we're followed by overnight. It's where we're selling off on the Dow Jones. So potential negativity there. Nasdaq seems to just hang around the all-time highs and teases us with a little bit of a sell-off, and then comes back stronger. The S&P, we're looking at a 4,000 level up here as being quite a psychological level. But again, the last three daily candles have ended up closing negatively. And today we're off to a small reversal. So European, very negative. The US indices, slightly negative, just teasing us, I think. Again, we're seeing the same sort of thing in the Asian Pacific indices. That's the Aussie 200. Nikkei holding up pretty well. That's probably the best of the bunch, along with China, there's no stopping it. And Hang Seng as well. That's looking pretty good. Looking to test this previous swing high back in April 2019.
Those bourses are closed today, aren't they?
Lazy buggers. What, because it's Friday?
Far East, I think.
Chinese New Year, isn't it? So it's been pretty quiet on that front.
So maybe that's another reason why it's closed on its highs, but plenty of room to sort of move a lot lower. Bar humbug. But anyway, let's move on to the commodities. Oil, we've seen a little bit of a turnaround in oil. This is only the hourly chart. We've seen potential for a double top, probably a double top here, treble top, head and shoulders formation. So looking quite negative on oil. Really, the sort of the level to watch here would be 57.95 on the upside. I think above that, looking good, ready for the break higher. But obviously, this is forming some sort of flag pennant type triangle formation. So we need to really get a break of $57. So yeah,
that could
either side of $57.
That could work out quite nicely with your FTSE call, because BP and Shell are such a huge influence on the index. If you do see a breakdown there, that could be the catalyst that completes that head and shoulders that you had on the FTSE.
Yeah, I mean, for me, I'd be happy to be long above $58 with a stop at $57. And also, if we do get a break, there's plenty of room for a correction. Even if we sort of bring some fibs into it, a normal correction would probably take us, well, 50% is down at $55, which would be a nice little target. Let's get the 38.2, which would be more likely, because oil, I hate that color.
The strength in the dollar this morning as well could potentially mean that we get a pullback in some of the metal stocks, which are another big influencing sector in the UK market. So all of that coming together could be a potential catalyst.
Yeah, I know we're Friday and sort of things slow down a little bit on Friday. But yeah, we saw a significant, we've seen a significant break overnight in gold lower as well. And again, we can sort of like draw a nice little head and shoulders formation on the short-term chart. I can't remember if we talked about this yesterday. I think we did. So that looks lovely, and that's played out really nicely. We've been down to 18.13 in gold. No real signs of it slowing down. Okay, we've got a bullish hammer forming on the, what's the time now? Where's my clock?
9:01.
Yeah, so that bullish hammer's formed. So maybe we'll get a little bit of a pullback higher in gold, but I think it'll be an opportunity to sell into. For me, we've got to retest these 1785 level and the 1765. Excuse me. We got an upward trending support line here. That would be interesting. At the moment, that's coming in at 1790. So I think, yeah, potentially very, very short term potential for a bit of a pullback higher, but I'd be looking to sell into that. And really stop would be maybe above 1835. If you want to go a little bit more shorter term, maybe have a stop above 1828, which is it's only been retested once. But yeah, I really like this head and shoulders formation, but we have sort of hit the target, the measure move target for that formation.
Lovely.
Is there. So that's hit it pretty much spot on.
Hit perfect, isn't it?
So yeah, looking forward to and silver as well. Silver's got potential for a break low. I think we're selling a break on the intraday chart. So a break of like 26.65 should see us retest $26. Copper. Oh,
head and shoulders.
Yeah.
Head
and shoulders.
Looking at some of the stocks.
Yeah, look at that.
Looking at Anglo American, Antofagasta, big copper plays, and they're
just what I was going to say. Yeah.
Yeah.
Over to you.
No, I'm sorry. I didn't mean to steal your thunder. I haven't got any charts ready. I was just
I was pretty much done. Over to Ian then.
All right, cool. Ian, the dollar's looking a bit perkier this morning, following not much yesterday.
2 pennies worth on oil first. We talked about this yesterday. 5-wave pattern to the upside. We talked about the fact we got a doji candle. 261.8% of 58.25. We said if we get a low close, then it was an evening doji star formation, but we've not really closed that low, but we are coming down. And then if we go to the intraday chart, which is one that we highlighted yesterday as well, we said a wedge breakout, and we actually mentioned this level, which wasn't far off, which was 58.60, which is the previous swing high, and we're moving lower. So the measured move target is here at 57.24, but I think this is going to be quite an impulsive sell-off in oil. The reason I want to mention it is because of it's pulling a Canadian dollar lower, and it's and we looked at CAD yen yesterday, and it's also pulling New Zealand dollar lower, and there's a setup on there that I want to discuss today. So I think this is going to be extended, and I think we're going to get all the way down here to close to this 361.8% extension, which is around about 56 bucks. So going back to the US dollar, we are having a bit of a correction to the upside. Remember, we've been talking about these horrible corrective legs. This could get all the way up to here, which is an 88.6% pullback level of this leg, but I think it's going to be shorter lived than that. So if we just pull this out, this is the sort of choppy formation that we look to be in. Now you have to take care on this BC leg, which we've talked about on numerous occasions. If we go to a fib retracement, wrong way, dropping my headphones off now. So basically you want to be looking at a 38.2 and an 88.6. So these are the two levels that it can if it's holding true to a cipher pattern, reverse at. So you can see that we're pretty close to the 38.2. So I don't think you really want to be buying dollar at this point because there's a good chance that it will reverse at that level and take us down to here. So the long-term basis, and like we said, the only prime time to trade the BC leg is if we get to here, which is 88.6, because you've got a relatively short stop. If you sell it here, your stop's up here, so the risk reward is appalling. So basically, at the moment, as far as I'm concerned, the dollar index is in no man's land, and you either want to be selling here or buying here, and you've got to wait. And this is a 4-hour chart, so we could be waiting quite some time really to get prime entry levels. So that brings us back to euro dollar, and again this is the pattern that I think is going to play out. But again, we're in this BC leg. Where is it going to stop? Is it going to stop down here, or is it going to stop here? So buying dips here or selling rallies up there. Cable is probably the one that's more favorable for this dollar move at the moment, and that's because we had this cipher pattern. It broke out of a descending triangle formation, which is a short time frame triangle formation to the downside. I think if we get a move back up towards sort of 138.12, that's worth considering a short entry. But again, the big picture for cable, and you've got to really focus on that bigger picture for the dollar index, is all the way up here, which is at 139.72, and there's some confluence areas up there with other time frames. So I do believe that this isn't a topping pattern in cable, and the move lower, not saying it's going to be short-lived. It all depends on that dollar index, but I think this dip will be bought, and we've still got higher highs and higher lows as far as these higher time frames are concerned. Dollar Swiss is a true reflection of the dollar index at the moment. So again, moving up in that BC leg. Where is it going to stop? What I do like is the fact that it did get towards 88, did reverse near 50%, and we've got a confluence area here, which makes a bat formation, and that keeps the longer term picture in place. So it means that we have completed a 5-wave bearish count. So the next impulsive wave should be taken from here. But again, we're going to be waiting quite a while, I think, for that to happen. This has good potential if we get up towards the 88.6, which is around about 105.50. Again, I don't think this has been driven by yen. I think this has been driven by the dollar this morning, because other yen crosses are looking quite negative. And if we go to a big picture, I still believe that's the topping of a 4th wave. So this move higher is, as far as I'm concerned, a BC leg. And if we look down here, the risk reward for selling into a rally up around 105.50 with a stop above 105.77 gives you a target level of all the way down here at 100.65. So again, really good R if it comes around. I mentioned yesterday this dotted line here, which is an alarm. 126.55 was a prime long entry. We didn't get there. We got to 126.61, and we're now pushing higher. So basically what I'm looking for here is a move back up to this 88.6% pullback level as the dollar and as oil moves lower, and then to potentially turn around there, move lower to this level here, which is 125.12. So again, that would make a pretty perfect sim pattern if that was to play out. Aussie dollar, we mentioned this yesterday, that we couldn't really get much of a feel for where it was going. It is putting lower with other commodity currencies at the moment, but I think the big picture is still up here. We've got a daily chart that highlights 261.8% extension level. I think it's at 79 the figure, so 78.86 sort of marrying up quite nicely with it. But do I want to be buying the dip? Not really. I prefer to be sort of selling the rally up here. Euro sterling, and again we're sort of just driving higher. Where is it? This chart. I think looks quite. Let me just pull it in a bit. So closed or reversed near the 61.8% fib. It now looks like an ascending triangle formation. I think if you get dips down towards this sort of level, 87.67 with a stop below here, offers quite good risk reward for a breakup, and then 88.28, 88.33 looks quite prime. Euro yen, and if you remember sort of yesterday, we were saying that it's really hard to get a hold on here. We are at an 88.6% pullback level, but it doesn't, there's no indication that that's going to stop as yet. This time frame does highlight a wedge formation, but I'd wait for a break of the wedge to confirm a negative bias in euro yen, because I think this is still being driven by euro strength, which has been highlighted by euro dollar and euro sterling at the moment. That's me done.
Thanks, Ian. Okay, so our 3 trades yesterday. What did we do? I went long on the dollar index, which did nothing. Actually closed where I got in, so 0 pips, 0 R on that yesterday. Steve, you had a buy on Bitcoin. You made 1.5 R.
I'm sure it closed a couple of pits offside, but you don't want to put down.
Check it if you want. Trade. I think I actually rounded it down, but you can check if you want. Bitcoin 1.5 R for you, Steve.
Boom.
That'll do. And Ian, you had a 0.32 R win on CAD yen. So yesterday we made a bit. Let's hope we can take that momentum into next week. Who's got a trade idea?
Up?
Haven't they?
I was 800 pips yesterday. I want another 2,200 pips.
It should be fine.
Yeah, because it's all about the pips, to be honest, I think. Really.
No. Pips are for
what
dicks.
Are you doing? Why haven't you added that on?
I have added it on.
Shut up, Trev.
Yes, yesterday I was 800 pips.
Right.
And I've made 2,200 pips there.
Oh, do you know what? I haven't added it onto this bit yet.
Oh, here we go. Fiddling the figures again.
No, it's...
Joe the fiddler neighbour.
Well,
I'm glad you're doing them, actually. I won't sort of criticise it too much.
Let's add that on for you. There we go. Yeah, have your pips on there now.
Don't know what he's doing to you. Any idea?
Always fiddling, mate.
Look at that, 3,000 pips.
That's why he's in the lead.
Almost in the pip. Steve's almost in the pip lead. If he goes Bitcoin again today, he's got a chance.
Well, I've got a chance of blowing it all in one trade as well.
Yeah. Come on, then, what you got?
3,000 pips. I don't know. Anyone?
I thought you had a chart ready there.
No, you're joking.
Ian's got one.
Yeah, New Zealand yen. I still like CAD yen. It did move overnight and started pushing lower, and I still think that is. We did mention that as well, the 88.6% yesterday. So that's looking quite good for a massive move down there, but I'm not going to do that one today. I'm going to do New Zealand yen. So pretty choppy price action, but levels near 61.8% found some selling interest. A prime short entry today is at 75.93, which is close to 78.6% pullback level, but I don't think oil is going to hold up. So I think this is looking like quite a decent head and shoulders formation. Prime, like I said, prime short entry 75.93. Confirmation is a break here, so I'm going to sell it, but I'm going to have to put my stop up above that prime short entry basically, and hopefully it don't get there. 74.60 is the target. I can't do that, can I? It's shocking.
Do what you want, mate.
As long as it's over 2.
There you go. I'll move it to there. So I'm getting short at 75.54 with a stop at 75.80 with a target at 74.62, 3.6 R.
Lovely. Best of luck. I'm going to take a look at US dollar again today. I'm still quite bullish. I know what Ian was saying about the corrective legs in the dollar index and the dollar pairs. This is dollar index on the weekly chart. I'm just wondering whether this is what's actually playing out. We're going to see a breakout of a big old wedge, possibly. A lot of fresh air up here to move into, and I guess that would be coinciding with a sell-off in risk assets, maybe. So I quite like that. Let's go on to the intradays. This is what I'm set up with on dollar index. Bit of a mess, but so I like the idea of this inverse head and shoulders here. It overshot it on the downside, but seems to have found some support around the 78.6 and the 88.6, and it's having a decent move up today. So that was my trade yesterday. It did nothing, but it's all action today. The other one I quite liked technically was dollar Swiss. Thinking there's maybe an inverse head and shoulders here that's taken shape. We've seen a decent pullback after the break of the neckline down to this 50% level, and it looks to be having a go today. So it's run away a little bit. Ideal entry would be a little bit of a pullback, maybe to 89.10. But I'm going to jump on now at 89.24. Going to tighten that up. Stop loss at 88.85. Head and shoulders has a measured move at 90.98. So looking for 4.44R on that today.
Good luck,
Steve.
Yes. So
Bitcoin.
Bitcoin, I'm going to go for it. I'm going to stick with my plan. This is the bullish flag formation, has a measured move target up to 54,300. I wonder if the stocks do sell off, maybe we'll get a little bit of safe haven flight Bitcoin. Don't know. If the dollar's strong, it is sort of goes against this trade, but going to tighten the stop up. So I'm going to go ultra aggressive on it. Getting long, it's trading 47,200 exactly now. So 47,200, targeting 53,900, a nice 9.57 to 1. 46,500 stop.
Boom. Okay, so we're buying dollar Swiss, we're buying Bitcoin, and we're selling New Zealand dollar, Japanese yen. Best of luck with your trades. Let's hope we can land a humdinger, and we'll brag about it on Monday. Data-wise today, US consumer confidence, Michigan consumer confidence at 3 o'clock. Anything else you've seen on the list, Ian, that we should be aware of?
No, mate. Oh.
Okay. Whoa. No.
Well, was he
Sorry,
on
mate.
Was he on Pornhub again?
No, not at that point. No, nothing else. Nothing else to look at. Michigan consumer sentiment. Thank God they're all on side, though, eh? I don't mind flashing it up again.
Hey, listen, at least you're trading your own book, and it's not
Yeah,
all.
just for clarity, I'm short CAD yen, I'm short the US oil, and I'm short New Zealand yen.
Putting your money where your mouth is. I like
I'm
it.
long Bitcoin.
from yesterday.
I'm long dollar index. Okay, let's wrap it up there then. Have a fantastic weekend, guys, and anybody who's watching, and we'll catch you on Monday.
Yeah,
Cheers.
enjoy.
Have a good
See you then.
weekend.
Cheers. Bye.